am joined here by Robert Kelly. Thank you very much for the time. Appreciate you joining us. And your perspective on what took place in that meeting today. I know you were here last March when there was a similar meeting. Was there a different tone here today?
There was. I would say back last March, the economy was incredibly fragile. There was still some sense that things could have gotten a lot worse before they got better. Clearly, credit spreads have come in. The stock market has improved tremendously. But at the same time, there's things that are worse. Housing prices are down further than they were, and unemployment's higher. And even though there's some encouraging signs out there, like GDP growth actually being positive in the third quarter, this nation is still in trouble, and it's very fragile, and we got to help bring it around. And we need more jobs in the country. So it was a frank, candid, business-like meeting where we got a lot of issues on the table, and it was a good discussion.
And this president, at least in his comments afterwards, seemed to suggest that the industry, as a group, not naming individuals, that the industry itself can do more, should be doing more, given the help the taxpayers provided.
Well, I think he's right, frankly. You know, the big issues on the table that the president talked about was lending, just generally, just credit, mortgages, compensation, and regulatory reform. We had good discussions on all of them. I think we can do a better job of talking about the good things we're doing, and frankly, we can do better at other things. And on lending, we all got to work harder to make sure that the credit-worthy borrowers actually do get the credit that they need to be able to hire people and help bring this country back.
Where's the common ground on compensation? Because, as you know, a lot of the banks, your bank as well, exited TARP, not under those restrictions. Banks could be doing something on their own to rein in executive compensation, yet the president's message is, I don't see enough of it.
Well, I think the good news is that there's been massive changes during the course of the year. And it was caused by, it was started by the executive management, by board of directors, by shareholders, and frankly by our regulators. And I think everyone has recognized the need for a lot less cash and more equity, and longer vesting periods, and linking risk to reward. And anyone who is insensitive to how the country is feeling right now, and the average citizen is feeling now, is making a mistake.
Does the government need to step in here and regulate that, or can the industry be trusted to do that on its own?
I think they're making the changes required, quite frankly, and it's happening as we speak.
What about regulatory reform? The president says there's a disconnect between what he heard from the executives in that room and their lobbyists up on Capitol Hill. They're standing in the way of the Consumer Financial Protection Agency, standing in the way of some of the other major reforms this president supports.
If you lined up all of the things being recommended by the president and the Congress, I'm willing to bet that we are in 100% alignment with most of the things. There are some differences on some issues, and I think we should get them on the table in an open and honest way, and let's get them resolved over the course of
Consumer Financial Protection Agency, that seems to be the president, the biggest stumbling block right now. Can you all live with a Consumer Financial Protection Agency? Can you do business with what he's talking about?
You know, Peter, we're not in the retail business.
Sure.
Our company isn't.
Industry as a whole.
But what I heard from an industry standpoint is that they recognize the importance, the critical importance of consumer protection. And perhaps an overall agency could make sense, but the things that I was hearing, certainly from bankers and others recently, including in the room, was the importance of ensuring that we have preemption in the United States. That is to say that we have common standards and products and marketing from state to state, so it's not confusing for consumers. And I also heard it's really important to make sure that we think about safety and soundness along with the importance of consumer protection.
Was it detrimental for this president to use the word fat cat bankers in that 60 Minutes interview? Is the president, he said he's not vilifying the industry. Yeah. Was he in fact vilifying the industry?
I can't really say that. It certainly got a point across.
Yeah. Let me ask you, I got to ask you while we have you here, your name's come up a lot in the Bank of America situation, mentioned perhaps as a leading candidate to replace Ken Lewis. Can you give us any sense right now the decision-making process on your part at this point?
Well, you know, Peter, I'm here to talk about how to bring our country back today and talk about lending and regulatory reform and the like, and I really can't comment on that.
All right. Can you at least rule out, I know that a few weeks ago you did say that you weren't interested in that job. Has something changed since then?
It's been great to see you today.
All right.
Thank you.
All right, Robert Kelly.
All the best.
Thank you very much. We appreciate you joining us here on Bloomberg. And a perspective from inside that room, an industry perspective, that meeting today here at the White House between the president and 12 top executives from some of America's biggest banks. Robert Kelly joining us here.